Okay, guys, welcome back after a short break because of the technicality. I'm going to revise very precisely what I was talking earlier, just for those people who have just joined us. For instance, Richard here. Richard, I'm talking about an exit strategy. Exit strategy is the most important factor when you're entering into the trade. Without knowing the exit strategy, I think entering a trade would be one of the biggest stupidity by everyone, anyone. It is literally like you're entering into the battleground without knowing where we would exit if things goes wrong against you. So you need to know exactly where to exit the trade. It removes the fear from your trading. It gives you confidence whilst you're trading. So knowing the exit strategy is very important, and this exit strategy, which I've established, give you the confidence. Not only the confidence, it increases immensely your risk and reward while trading. So means is that you will exit the trades which are wrong with the small losses, and the ones you are right will contain within those trades for with big profits, guys. So smaller losses, huge profits. Smaller losses, huge profits. So let me revise it again quickly. Okay, guys, say this is the resistance. So that's a resistance. Can everybody see this, right? Okay, that is the resistance. Price arrives at resistance. I'm giving you the example of a sell trade first. The price arrives at resistance. What do you want to do, guys? Sell or buy? Come on, say buy, please. Anyone say buy? Okay, great. Nobody's saying buy. Why? Mike saying buy, right? So, Mike, the price arrives at resistance. You want to buy, right? Seriously, Mike? Sell. That's better. It's a sell trade. I'm just testing you here. The price arrived at resistance. You want to sell. Let's, for instance, you take a sell trade here. That is your sell trade. I open up a sell trade, guys, but I need to have the exit strategy. I need to know exactly, precisely where to get out of the trade if she goes against me, right? Without knowing that, obviously, I'm gambling. So I need to know precisely where to go get out of the trade when the trade goes against me. And the exit strategy that I'm giving you, 8 out of 10 times, if the price breaches those levels, the price will continue to the other direction, guys. So you took a trade, guys. Always mark a reference line. I've discussed this reference line in lecture 2, guys. Reference line. Blind reference line for the first time because you're not connecting any points here. You're just blindly having this reference line and give it a slight breathing space. Does everybody understand? Say yes if everybody understands and with me on this. Great. Reference line. What is the exit strategy then? The strategy is this. If the price, what I'm saying, if the price at some stage breaches the trend, the reference line, and close outside, which is called a retest. If that happens, we will close our sell trade, guys. That is where you close the trade. Does everybody understand? So a break and the retest outside. The question is what time frame, guys? H1 is fine if you're trading H1, guys. If I'm trading and my entries on H1, I rather want to see the break and the retest on H1s. If you're trading 4 hours time frame, or you want to see a 4 hours candle breaking and closing outside, guys. So it's all depend the time frame you're trading. Understand, everyone? Say yes, please. Come on. Okay, great. So now, 8 out of 9 times, 8 out of 10, what will happen if the price breaches and closes outside? Trust me, this is what's happening then. The price will continue to the upside, guys. Trust me, this will happen. If the price breaches and closes outside, the price will continue. So the exit strategy is this. If you enter a sell trade on the break and the retest, an H1 retest, just get out of the sell trade. The trade is wrong. Understand, everyone? And 8 out of 10 times, guys, if this is the right trade, the price will never breach this. The price will go down, test these levels, and continuation the downside. Everybody understand? Okay, now the computer is working fine, so I could, yeah, that's fine. Okay, great. Now, guys, when the price takes its first bound, very important what I'm saying right now. It is very important. You need to do this precisely the way I'm teaching you guys. When the price rises again, when the price rises again, guys. Yeah, choppy. What do you mean by choppy here? Is it not clear, guys? Choppy means bouncing, right? This is the first time I've heard anybody saying my voice is bouncing. You can see the excitement in my voice at the moment, because remember, I'm telling you the gold mine of the forex trading. It took me a year before I got a grip of this strategy, and trust me, the day I got a grip of this strategy, it's always been profitable. So I used to close my eyes, lying on the bed, thinking about it. What if the price goes up? Test the reference line, and she breaches. I'll exit the trade. Should I exit the trade? So not only I was practicing on the charts when I was literally tired and lying on the bed with my eyes closed, I was imagining this. I'm not imagining anything else, right, guys? I was imagining these sort of things. Trust me, this is the very important factor. It takes out the fear out of your trading. It gives you more confidence. It not only gives you more confidence, it increases your risk and reward, guys. Understand, everyone? You say yes, please. Okay, guys. The second point, very important. When the price takes a first rise, first of all, you mark this as a blind line, right, guys? Now, when the price takes its first rise, you need to adjust this, guys. Does everybody understand? Says you need to adjust this with this. Now, guys, unless and until the price breaches this and closes above it, you will stay in the trade. You will stay in the trade unless and until the price breaches break and close outside. If it doesn't happen, you can stay in the trade, because remember, the price, unless the price, if the price has to go to the upside, the price will have to break this trend line, guys. Understand? Does everybody understand? Please say yes. And also in the sell trade, this reference line, which you begin as a reference line, eventually will turn as a resistance of the channel. And this will be your support, guys, anticipating the channel. Now I'm expanding on the reference line. The reference line will eventually will become what? Channel resistance, guys. Understand? And you will see this happening. Make sense? Does everybody understand? Because remember, the price moves in channels, right? So we begin with the reference line. Eventually that reference line will turn into a descending or ascending channel on the sell trade and ascending channel in the buying trade. Does everybody understand? So if the price breaches and closes outside, forget everything, get out of the trade straight away, forget it. It doesn't matter what happens after that. Even if the price goes back into the channel, I'll give a shit about it. My focus, my strategy, implementation of the strategy has to be persistence, consistent. Understand, everyone? I'm going to talk about this in a second. But do you guys understand what I'm saying? So I don't have to fear when I'm trading. I don't have to fear. I don't have to apply my mind a lot. All I need is to follow the rules of the exit strategy and stick with it. Just act like a computer, guys. Do not become a scientist by yourself thinking she will go to the upside, break and retest and eventually will come back, so I'd rather stay in the trade. Forget that mindset. Just follow the rules. Anybody has any questions so far? Anyone? Richard, do you understand completely? Dania, do you understand? Mark, Lorenzo, Manish. Everybody understands, right? Okay. Let's apply this strategy. Can everybody see this? Okay, guys, for instance, this is the resistance. So everybody see this, right? So I'm going to show you the implementation of the strategy first, and then I'm going to show you how to be consistent with it. See this. Say, guys, this is the bearish engulfing candle. You took a trade on this candle, right? You took a trade on this candle. This is your exit strategy, guys. Remember, a blind reference line like this. You guys understand? The price goes down, the price came up, guys. Unless the price breaches this and goes above, you will stay in this sell trade, and that is your stop loss. Normally, I like to see the break off this, above this level, guys. So I want to see the break around these levels. But then again, even if the price doesn't breaches this reference line and closes outside, I will stay in the trade, guys. If the price rises, test fails, and continuation to the downside. When this happens, you need to adjust your trend line, guys, like this. You guys understand? So you will stay in the trade, and what happened? The price quickly went to the downside. You already had how many pips? 94 pips. Now the beauty of this is this. See, even if the VIX goes, Richard, you need a break to the upside. A wick is a break, and then you need a retest. You need to see the candle closing on that reference line, and then you'll exit the trade. Make sense? So you want to see this. This is the reference line. You want to see the break of candle and then candle closing outside. Then you'll exit. Understand, guys? Okay. Now, let's see this. The beauty of this is, remember, if you take a trade here and you had a breach of this, trust me, guys, your stop loss will be 25, 35 pips. But if the trade will go into your favor, you will make at least 3 to 4 times of a profit off against your losses, guys. Understand? See this, 90 pips. Make sense? Does it make sense, guys? So the beauty of the exit strategy is what? Is this. You exit the trade, a wrong trade, with a very small stop loss, a very small loss, and you will remain on in the trade into the right, a positive trade by using the same reference line for a very long time. So the profit will always be bigger than the losses, and it increases your risk and reward. Understand, everyone? Okay, let me give you an example. I sometimes just blindly open up the trades on certain significant level. I don't even wait for the candlesticks, to be honest. The reason is I know I've got so much confidence. It's like it's a battleground that I'm going inside. So I don't care if I didn't analyze it correctly, because I know exactly my troops can always come out of the battleground in case of danger. Understand? So I've got that confidence that even I just send a couple of troops inside to just move around and see what's going on. If they find an opportunity, they just kill the enemies. But in case the things goes wrong, right, they know exactly how to get out of it. So I'm not in a fear that I really have to make sure that the trade is a reversal trade or it's continuation trade. Make sense, guys? So at times what happened, I don't even analyze properly. What I do is the price hitting a certain level, I'll just enter based on my strategy, guys. The reason is I exactly know, even if I had the first loss, the loss will be very small, and the moment I've had the winning trade, it will be 4 times bigger than the losing trade. Make sense? Say yes if it makes sense. Come on. So let's say I took a trade here. Reference line. See what happened. I took a trade here. That is the reference line. The price closes above, right? Breaches, closes above. My stop loss will be what? After this candle close, my stop loss will be what? 34 pips, 5 pips, right? And see what happens. When the price will go into your favor, trust me, the price will hardly attempt to retest the trend line even. How many pips? 133 pips, right? How many times bigger this profit is bigger than the loss? 4 times, I think. Make sense? Does it make sense? Reference line. That is it. I want to see the break of this, or else I will stay in the trade, guys. And then utilizing your trend lines, you can build upon your trade. Make sense? But remember, that is the point. I'll exit the trade with 25 pips stop loss. If it goes into my favor, again, at least I've got 74 pips. Keep on using this strategy whenever you enter. Keep on using this strategy whenever you enter. Trust me, you take 10 trades. You take 10 trades, guys. Do not judge yourself based on one trade. You take 10 trades using the same strategy. If you have at least 4 winners and 6 losses, for instance, you will be in profit. The reason is why you will be in profit, because risk and reward will be good automatically using this strategy. Make sense what I'm saying, guys? Makes sense. So all you need is 4 winning trades out of 10 using this exit strategy. So do you need to be fearful whilst you're trading, guys? Come on. Do not judge yourself based on a single trade. Do not judge yourself based on two losses. You don't even have to be concerned about losses. The reason is this. The reason is this. The reason is you know exactly and precisely your risk and reward is good. And it is unless your risk and reward is good in the trading, you would trading isn't a business. Then it's a gambling. Risk and reward. Excellent. A best trader has the best risk and reward. Without a risk and reward, you're not a profitable. You're not a professional trader, guys. To have the forex to use the forex consistently, to be profitable with consistently over the long period of time, it is the good risk and reward which keeps you within this business, guys. It is not your understanding and knowledge of the technicals alone. Make sense? So do you guys completely understand what I'm trying to teach? Let's go on the daily time frame, guys. I took a trade here. That was my reference line. Just see this, right? Blind reference line like this. The price came down, price rises, test, and continuation to the downside. So see this, I should exit this trade if the price breaches this, right? That is the maximum. That is the maximum. And then you establish this resistance line. The reference line turns into a channel resistance. Makes sense, guys? Does it make sense? And that is where it breaches. This is my exit. If I'm not a swing trader, this is my exit, guys. You understand? The price breaches closing outside. Get out of the trade. Get out of the trade, guys. You should have already get out of the trade around these levels, to be honest. But let's say you were in this trade, guys. But that is your. This is where you should exit. If you are not a swing trader, makes sense. So even if you get out of the trade here, your entry was here. You will still be in a couple of pips profit, right, guys? Makes sense. So even in the worst case scenario, you will always be in profit, guys. You will be in control of your trading. Your losses will always be small because you know exactly if when and if this will go to the downside, your profit will be 6 times bigger. Let me give you an example. The price came back up again, right? For instance, price came back up again. This is so let's see you took an entry after this candle, guys. This is your reference line now. Make sense? I'm going to show you the risk and reward, guys. The first trade I've normally closed with like 30 pips. Let's say I've marked with 20 pips profit. The next trade I've entered here, and this is my reference line, guys. I entered here, that is my reference line, and that is where I'll exit the trade. So that trade goes against me. Make sense? Breaches and closes outside. It makes sense. You guys understand the example of retest here. Okay, I'll exit the trade. How much loss I've got? Remember, I'm trading on the daily time frame, guys. So my trade, I've lost 110 pips. This is the daily time frame. Remember, 110 pips are like 34, 40 pips on a H4. Okay, let's take another trade. Now, I'm not scared of my losses because I have the confidence my losses are smaller than my profit, guys. All I need is to wait for the market to, and then again, hanging man here, right? I've already have this. So what I just did this, guys, a reference line. Make sense, guys, how I mark this reference line? Connecting these points here. You see what happened? 184 pips, guys. Understand, everyone? 181 pips. See the profits. See the difference here. Risk. Remember, the quality is the real thing which is giving me the confidence to let my troops keep on entering into the battlefield without fear is because I know my risk and reward is good. I'm back in profit again, right? Okay, let's again. Remember, you've got the reference line. I'm going to show you the buy trade now. I don't care if I'm entering wrong, if my analysis isn't right. I don't care. All I need is 4 wins out of 10. I always trade with the mindset of 10 trades. I always trade 10 trades a week, and that is how I like to trade. 10 trades a week. And you will judge yourself based on the results of the 10 trades, guys. Make sense? And all I need out of the 10 trade with the mind, this is my mindset, weekly mindset. I need 4 winning trades out of 10. Make sense? Does it make sense? All I need is 4 winning trades out of 10 and I will be 100% in profits. I'm going to show you again. Okay, I've got a reference line here, obviously, based on connecting this with this, right, guys? So the price find of support, guys, rises, rejected, rises, breach of this. I've seen these candlesticks. Let's say I don't care. Let's say this is a support level. All I need is a reference line, blind reference line now. Forget my entry. Even let's say my entry was, for instance, I don't even analyze properly. I didn't wait for the double bottom. All I would see this, I enter the trade. Make sense, guys? This is the reference. I need a break off this reference line and the retest outside to get out of the trade. See what happens. See what happens, guys. Tell me. Breaches. When the price breaches this, I've got more confidence. The trade is fine. Continuation to the upside. Yes, boom to the upside. Exactly. How many pips? 145 pips. For instance, let me imagine you took what your stop loss would be like this. 60 pips, 70 pips, 80 pips. Let's say 90 pips. So how many pips here? How many pips were? 242 pips, guys. Judge yourself based on 10 trades. Do not judge yourself based on a single trade, guys. And then again, the most important factor is the consistency of applying your strategy on the charts. You cannot just change yourself based. Do not make yourself a philosopher, a scientist. Consider yourself. Listen and hear me out. I am the scientist here, not you guys. And I am the instructor, not you guys. You're the listener, right? Following me. That is it. Remember what I said. So do not apply your mind to it. What I've been saying during the whole course. Do not apply your mind to anything. Listen to me what I'm saying and just keep on applying that, right? Consistency has to be there. Let's again imagine. I found this trade, guys. Beautiful trade, shooting star, right? Reference line. What happens even if the price spikes to the upside, no close outside, there was no retest. What happened? Continuation to the downside. Can you see this? And trust me, this is not a rally. That is called, we call it a rally, guys. See this. 492 pips, right? Yes. Come on, guys, say yes. The stop loss was like how much? 118 pips, for instance. 150. I give a damn if hundreds or 50 pips. We are trading a daily time frame here. Makes sense. So do you guys understand? Based on this, I don't care. I had a loss of 110 pips. I've got 400 some pips now. Add on to this. Let's say 400 pips. Does it make sense, guys? So do not judge yourself based on a single trade. Let's say yourself, I'm going to take 10 trades a week. All I need is 4 winning trades. Trust me, you don't even need 4 winning trades, to be honest. You need like 3 winning trades. Okay, let's go to a shorter time frames and try to find the entries. 1 hour time frame, guys. Everybody likes trading 1 hour, right? Okay, let's say this. The price came on the support, guys, and you got a reference line. I did took this trade, by the way, last week. Let's say you took a blind trade here. You need to have your reference line. That is your reference line, right, guys? Unless the price breaches this, stay in your trade. See what happens. The price continuation to the upside. The price never breaches this reference line. Makes sense. And then adjust your reference line. First this, then after first this, then first this. Then when the price breaches and closes, just to break outside, then adjust the reference line again, guys. Make sense, guys? And then again, the price fails to break outside, close back in. So what I suggest is always have some little breathing space on the reference line. Just give it a breathing space like this. So when the price breaches this and fails to close outside, give it a breathing space. Make sense, guys? The price, how much your stop loss is? Just see this. My stop loss was like 25, 21 pips, right? So look at the profit taking, 118 pips. And then I'm going to give you an example of a failed trade, guys. For instance, let's say, for instance, you took a sell on this, right? That is your reference line, and this is what you need to do. Be precise and consistent. This is your exit. How many pips loss is that? I think 11 pips, 12 pips, right? You took a trade here and you exit your trade based on this price breaches and closes outside. Make sense, guys? Does it make sense? Okay, this happens. I take a small loss again. Let's say I see another opportunity. I'm going to take another trade. Same exercise. The price breaches this. Come on, anyone? Has the price breaches it? No. What happened? Price went to the downside again, 61 pips, right? So the consistency of applying this strategy has to be there. Has to be here the same. It has to be. Okay, if you want to take a sell trade here, I don't mind you take a sell trade. It doesn't matter. You took a sell trade after the candle close, right? I wouldn't even take the sell trade. The reason is price is just close to the support here. But let's say for an argument's sake, you took a sell trade here. What happened? The price breaches the reference line, closes outside, exit your trade straight away. How much loss? 15, 20 pips. H1. H1 is 15, 20, 25 pips maximum. Makes sense, guys? So I got a small loss here. But I wouldn't even take a trade here. Instead, it's a buying trade based on this reference line, guys. So you don't trade with the trend. And then again, see what? The price breaches, you took a trade. Where you should exit the trade, guys? This is where you should exit the trade, right? And you see the buyers entering into the market. For instance, you see this candle, bullish candlesticks, buyer entering into the market, have your reference line again. Based on this two candlesticks, see what happens. Stay in the trade. Now what? Stay in the trade. For instance, I want to take a counter trend trade based on this. I'm expecting the price to break. Remember, the best entry will be here. Remember what I said. This is the best entry. This is your best confirm entry to the sell side, right? But for instance, you want to take an aggressive trade. Doesn't matter. Just have your reference line. If the price breaches this and closes outside, you exit the trade. If she doesn't, then trust me, the price will continue to the downside. Makes sense? So even if the price breaches and continuation to the upside, you'll have a very small loss, guys. Remember, that is the mistake you guys did in EJ last week. All of you guys have done, the sellers on EJ have done this mistake. And had you exited the trade using this strategy, you wouldn't even blow your accounts. Makes sense what I'm saying, guys? Makes sense what I'm saying, guys? Okay, great. Guys, I couldn't resist my laughter actually. Okay, guys, it's very important you guys understand this. It's very important. Okay, a thought came to my mind actually. That made me laugh. So you see this, guys, what happened? The price breaches this, closes outside, continuation to the upside. If the price has to go to the upside, has to breach. If you took a sell trade, just exit the sell trade on a break and the retest. Remember, this is if you're trading a counter trend trade. Makes sense? And if the price breaches this, it gives you more confidence. This is 100% continuation to the downside. So the exit strategy helps you to exit the trade precisely with the small losses and remains in the trade going in your favor. All you need is to apply this strategy consistently on 10 trades, guys, consistently, and always take a trade from significant levels, guys. Do not just keep on taking a trade from smaller levels. Wait for the trades. Take the trades on consistently on significant levels. Now, guys, what I'm saying, the best trading is this. Take the trade on point of reactions. After the break of the trend line, I'm going to give you the example of this. So tell me, guys, do you guys completely understand so far? And does it helps you to understand and gives you the confidence in your trading? Yes or no? I didn't even see any hell yes so far. Dark yes is better. Language has to be respectable at all times. There is no compromise on this. So guys, the best trade will always be the trade from the point of reactions. Point of reactions or the channel's resistance and support levels, guys. Remember, these will always be your best trades, guys. First of all, the point of reactions. And then when the journey begins, the channel's resistance and channel support will always be the best trade, guys. So remember, all you need is, you take a sell trade here. Remember, this channel resistance is acting as a reference line. Does it not? Is this not a reference line? That's what the whole point is, guys. For the price to go to the upside, the price has to break this and see what happens. So, Rod, you take care of yourself. And imagine, guys, for instance, you're taking a buy trade on this. That is my reference line. Makes sense? I'll give it a breathing space. Makes sense? This is my buy trade. Unless the price breaches this, I'll continue staying in my trade. And trust me, if the price has to go to the upside, the price will be doing like this. And obviously, I will be adjusting my. Makes sense, guys? Similarly, like this. Let's say this. The price came, mark a reference line, and see what happens. Can you see this? What happens? The price has respected continuation to the upside. Makes sense, guys? So the reference line is also a counter trend trade line, guys. But you guys completely understand, because I'm going to finish this lecture. My whole objective was to give you something, a tool which you can use whilst you're trading, and very carefully using this tool, guys. Give you confidence, first of all, because you have the opportunity to exit the wrong trade with a small loss and remains in the profitable trades. First of all, and secondly, the most important thing is, do not judge yourself based on one trade, guys. 10 trades at least. Okay, now I need to go to. Take care of yourself, and guys, practice this on your charts. Go back and practice this exit strategy on your charts, and come back to me with your feedback and tell me you see that fine. Do you feel the difference? Okay. Okay, great, great.